The Cameco Corp stock, ticker symbol CCJ on the NYSE, is currently trading at $106.38, reflecting a slight intraday dip of minus 0.48% from its previous close as of 4 p.m. EST on October 29, 2025, which represents the last available live trade data, with the market now closed at the time of this script's writing. The close was slightly down after a major upswing day, which is the immediate, crucial insight here that demands attention. The expectation coming into this week, after such a long and powerful run over the past 52 weeks that saw the stock climb from $35 to a recent high of $111.16, was likely one of consolidation, perhaps even a healthy pullback after a multi-day surge. Investors who have been riding this uranium wave, especially those using platforms for self-investing like Fidelity or SoFi Invest, or those who rely on a Schwab Intelligent portfolio, were probably bracing for a profit-taking reaction. The reality, however, is that even with this minor dip, the overarching narrative for Cameco has fundamentally changed in a way that goes far beyond a typical commodities play. This isn't just a bump in the uranium spot price, this is about an unprecedented, formal governmental commitment to nuclear power infrastructure. The unexpected market-shaking news is the recent announcement of a partnership with the United States government, alongside Brookfield Asset Management, to accelerate the deployment of Westinghouse nuclear reactors. This is an $80 billion commitment from the U.S. government to financing and facilitating new nuclear builds. Cameco, through its stake in Westinghouse, is now positioned not merely as a uranium miner, but as a direct beneficiary of a major strategic geopolitical shift toward nuclear energy, a critical component of national and energy security. This is the new lens through which every movement in CCJ stock must be viewed, immediately challenging the common investor belief that Cameco's fate is solely tied to the cyclical, historically volatile uranium price. Let's ground this a bit by looking at the recent stock movement. The stock had an absolutely explosive day on the 28th of October, surging nearly 23% following the nuclear pact announcement. This massive vertical move, fueled by an extraordinary volume of over 7 million shares, which is significantly higher than the average, instantly reset the trading range. The minor retracement of around half a percentage point you see in the latest available closing price isn't a sign of weakness, it's simply a technical, almost negligible re-leveling after a historic institutional-grade catalyst. Large institutions, which hold over 70% of the outstanding shares, are now re-evaluating their positions in light of this long-term policy tailwind. We've seen major firms like Vanguard and FMR LLC maintain or increase their substantial holdings, but this new development will likely trigger a full-scale reassessment by every major individual brokerage and wealth manager. The institutional money is looking for stability and multi-decade growth, and a direct government-backed partnership provides exactly that, making the stock's valuation less susceptible to the short-term noise that characterizes much of the online investing community, though retail investors are clearly chasing the momentum on apps like Robinhood and Interactive Brokers trading platforms. The sheer scale of this governmental endorsement is the reality that is now crushing the old expectation of volatile commodity stock trading. The primary driver for the immediate future of Cameco is clearly this monumental deal. The perception that Cameco is a one-trick pony, just a company that digs uranium out of the ground, is thoroughly outdated. The company's structure now includes three key segments: uranium, fuel services, and its joint investment in Westinghouse Electric Company. This move solidifies its status as a full-cycle fuel provider. The uranium segment handles the mining, milling, and sale of uranium concentrate from their world-class, high-grade assets like McArthur River Key Lake in Saskatchewan. The fuel services segment covers the refining and conversion of uranium, essentially preparing it for use in reactors. But the Westinghouse investment, now dramatically amplified by the U.S. government's $80 billion nuclear commitment, puts Cameco in the business of nuclear technology and construction. This is a much stickier, higher-margin business than simple extraction, offering a long-term, predictable revenue stream tied to multi-year construction cycles and maintenance contracts. This is how the company generates value, by maintaining control over a critical, geopolitically sensitive supply chain. When you look back at past performance, the narrative was always about the pending supply deficit. For years, the market for Cameco's core product, uranium, was depressed, forcing the company to manage its Tier 1 assets by curtailing production, a strategy that preserved value but constrained immediate growth. Their Q2 2025 earnings report, for instance, showed a substantial beat on both earnings per share and revenue, EPS of $0.71 against a forecast of $0.35, with revenue at $877 million. Yet the stock initially saw a pullback due to lingering concerns about contracting volumes and operational challenges. This is the quintessential expectation versus reality tension. Excellent financials, but a timid market, still viewing it through the old lens of supply-demand anxiety. The reality now is that the government deal acts as a massive forward contract, implicitly guaranteeing demand and injecting a new floor of stability into the long-term outlook, which simply cannot be overstated. This is less about commodity price and more about essential utility and government-mandated infrastructure build-out. Now let's talk about the forward view. The future outlook for Cameco is directly mapped to the global nuclear renaissance, which is now receiving state-level financial engineering and political protection. The expectation is that the recent surge will eventually fade as traders move on to the next hot stock, possibly Tesla stock if they announce a major battery breakthrough, or maybe NVIDIA stock if their next earnings call shows a continued acceleration of their data center dominance. The deeper reality for Cameco is that the tailwinds here are structural and multi-decade. We are seeing countries like France, Japan, and the UK extending the lives of existing reactors and committing to new builds driven by decarbonization targets and the stark necessity of energy security in a fractious geopolitical landscape. Cameco's strategy is clearly focused on capturing what they call full-cycle value, meaning they want a piece of every stage of the nuclear fuel process, from the ground, uranium mining, to the reactor core, fuel services and Westinghouse technology. This is a much stickier, higher-margin business than simple extraction, offering a long-term, predictable revenue stream tied to multi-year construction cycles and maintenance contracts. This is how the company generates value, by maintaining control over a critical, geopolitically sensitive supply chain. Now let's talk about the forward outlook. The future outlook for Cameco is directly mapped to the global nuclear renaissance, which is now receiving state-level financial engineering and political protection. The expectation is that the recent surge will eventually fade as traders move on to the next hot stock, possibly Tesla stock if they announce a major battery breakthrough, or maybe NVIDIA stock if their next earnings call shows a continued acceleration of their data center dominance. The deeper reality for Cameco is that the tailwinds here are structural and multi-decade. We are seeing countries like France, Japan, and the UK extending the lives of existing reactors and committing to new builds, driven by decarbonization targets and the stark necessity of energy security in a fractious geopolitical landscape. Cameco's strategy is clearly focused on capturing what they call full-cycle value, meaning they want a piece of every stage of the nuclear fuel process, from the ground, uranium mining, to the reactor core, fuel services and Westinghouse technology. This is why the stock, despite being up significantly over the past year, still has runway, provided they execute on the production ramp-up. The challenge is in the execution, and that's what we will all be watching in the coming quarters. Comment below how many shares of Cameco Corp you currently hold, or what percentage of your portfolio is allocated to uranium and nuclear stocks to let us know where you stand on this powerful new energy trend. We are looking at a fundamental shift here, and the long-term contract book Cameco has built, now totaling around 220 million pounds of uranium, provides a revenue and stability floor that few commodity companies can match. The inclusion of the Westinghouse component, now heavily supported by the U.S. government, means they are not just selling a commodity, they are selling a comprehensive energy solution, from the mine to the reactor core. This diversification into the nuclear technology space, augmented by the government's financial backing, is the ultimate factor separating Cameco from its pure-play mining competitors, and is the core reason the stock's reality is exceeding what most traditional expectations would allow.